last quarter, the banking results surprised one and all by virtue of how they performed, because a lot of people were expecting some big negatives to come out, and that didn't happen. You think the quarterly earnings performance from banking would probably stay at an uptick and at a good level, or you think that there can be alarm bells by virtue of some NPAs rearing their ugly head in this quarter or possibly the next quarter as well?
See, I'm not an expert on banking, but if I were to just do a very broad brush analysis on the earnings, they surprised because NIMs expanded, not because NPL progression stopped.
Right.
I am worried about NPL progression because that NIM expansion is not that sustainable. Okay. Because there is a bit of mismatch there in terms of the duration aspect comes in there, because your liabilities reprice more slowly than your assets. So that catches up with you, especially because liability costs are not falling in a hurry. So it will catch up with them. But if the NPL progression slows down, which it didn't in the last quarter for public sector banks, private sector banks were doing okay. But for public sector banks, there was still NPL progression happening. If that tends to slow down, then I think it's time to reverse the fundamental call.
Okay. Which sector or which sectors do you find the possibility of maximum margin expansion coming in? You did say that that was the big theme that you're looking forward, and because of the low base effect, so on.
I think consumer sectors will lead it. They will probably lead the margin expansion story, followed by industrials. But I think consumers will see a lot of margin expansion because that's where all the stress was in terms of raw material cost increases.
Great. Okay, I'll come to the real estate question in a bit after this. But aside of infrastructure and possibly real estate, which we will come to, do you like anything which is in distress right now, but wherein the cycle could turn about in the next 12 to 18 to 24 months?
See, in a portfolio context, you can always have a couple of distress names. But my approach to investing has always been one of focusing on companies with good fundamentals which are not priced in. But if you have a speculative instinct, and there's tendency to make outsized returns as much as there is a tendency to lose a lot of money in distress cases. I think it's not a bad time to actually buy a couple of distress names because the market is overall a lot distressed. So eventually I think some of these distressed names will do well, but it needs to have a portfolio context. If you're going to buy just 5 stocks in the market, then I think it's a little bit excessive speculation to buy distressed names. But if you're going to have a portfolio of 20, there's no harm in having a couple of highly geared companies which will tend to benefit if rates come down, or companies that have got problems with cash flows right now because of some regulatory issues which may get resolved, the regulatory issues are overcome. So those event or scenario based companies I think may be worth a shot.
Okay. Why real estate, Ridham?
No, I said real estate in the context of infrastructure, but actually it should be in the context of financials, because real estate is actually a subsector in financials. Real estate, I think property prices and property demand, I think, has the chance of rising in the next 12 to 24 months. We had a fairly difficult environment in the last 2 or 3 years for a lot of these companies. Some of them have been sitting on oversized balance sheets, a lot of debt, and they have been attempting to restructure their portfolios, sell land parcels and delever, reduce the size of the balance sheet. I think the market is also looking up. It's in a way tied to my urban consumption theme. So urban demand for property will go up. I'm actually quite stunned with the recent statistic that came out of the census, which showed that the average urban household size has gone down below 4 for the first time in India's history. I think that's a striking number. It basically shows that nuclear family are increasing in this country. So that's a very strong undertone for property demand in India. And given how prices have behaved over the last 4-5 years, I think the household today has got better buying power, because his income levels have risen faster than property prices. So now he has better buying power. So I think we have reached a stage, if interest rates start coming off a bit, I think you will see property demand recover ever so slowly, but it will recover. So I think some of these stocks represent good value, which is why I would go. I wouldn't recommend distressed balance sheets, but I think there are a bunch of stocks which don't have such distress on their balance sheet, which have got good business models, are following good governance standards, and I think generally speaking should deliver returns to investors.
So one final word, Ridham. Over the next 12 months, or rather let's look at some triggers over the next couple of months which will probably give a direction to the market over the next 12 months. What, according to your mind, is probably the biggest positive, if it happens, would be? Say maybe margin expansion, say maybe a better than expected rate cut delivered by the RBI. What to your mind is the biggest key trigger that will push the markets higher?
Now, I'm not going to put it down to one because it's never so simple. Okay. But I think you can break it up into 3 buckets. So think global first. So globally, I think a lot of things will happen which are fairly uncertain right now. We are not sure where US growth is heading, and the jury is out. And it seems to be oscillating between a recovery in growth and tepid growth. And also do not forget it's a presidential election here. So it's a complex scenario in the US. At the end of it, I think India needs a benign outcome in America. We don't need any extreme outcome there. The second is how the deleveraging in Europe progresses. Right now, it's not the central debate in the market, but mind you, just 3 months ago, it seemed to be India's death knell. LTROs have seemingly succeeded in pushing that debate into the background. But the deleveraging in Europe is not over, and Europe has a structural issue. So it will come back. So watch out for how that happens. From an Indian perspective, what is crucial is the pace of deleveraging. I.e., it's a given that Europe will delever. But if that deleveraging happens in a short span of time, it will hurt India. I think the third thing is obviously oil and what happens to oil. And in the case of oil, there are multiple factors that can affect oil. So QE3 can affect oil, supply disruption can affect oil, Chinese demand can affect oil. So, oil can get a lot of factors to shock it. Locally, obviously the RBI policy and therefore inflation. I think that we need to watch that very carefully, and we know there are dynamics around inflation. Second is corporate fundamentals, which I think is far more critical than the market believes right now. To me, that could eventually turn out to be the most important factor in the next 12 months. And all these macro debates will recede in the background. And the third is, what happens to policy momentum. So that is, again, something that can lift the market and lift the sentiment at various points in time. I would say the expectations are very low. Nobody really expects any big bang reform. So if a change happens on that front, it will be usually positive for the market. And the final thing is about where the market is in terms of valuations and what's happening to the demand for shares. And I think that seems to be quite favorable. So that, I think, continues to act in favor of the market. So I think this is the way I would look at the various triggers. So if I were to pinpoint one, then I think it's corporate fundamentals with a 12 to 15 month view. But in the next 3 months, a lot of these things will play around with the market. And I didn't talk about things like monsoons and other factors that usually have their seasonal role in market behavior.
Great. Suffice to say, you're sounding a lot more bullish than maybe what I've heard in the past as well. But thanks so much, Ridham, for joining us on this edition and giving us your views. Thanks a lot.
Thank you.